Investing in the stock market is dangerous. Many people have lost a lot of money in the stock market. Some lost millions. As a matter of fact, there was a study that 85% of people go broke after a bull run. I'm not surprised because I understand that every investment has its own risk. There are certain dangers in growing your money. Even if you save it in the bank, it can be eaten up by inflation over time. So how can you protect your money from losing it? How can you manage the risk? By having a risk management plan. These are the things that you need to do to minimize the risk and to manage it. You need to follow these things when the market isn't going your way. This will help you invest strategically. This risk management plan is for people who wants to invest in the stock market on a regular basis, like investing 5,000 pesos a month or more. Hi, my name is Frances Calera and I'm the founder of Investalk Philippines. I'm also a stock investor, licensed financial advisor, and entrepreneur. If you want more of this, please like and subscribe. Also, hit the bell button so you will be updated in our Investalk Philippines content. Here are my tips to build your risk management plan in the stock market. Tip number 1, understand what you're getting into. Robert Kiyosaki once said that the real risk comes from investor, not from the investment. It is true because I see many investors lose a lot of money in the stock market while some profit from it. I even met a lot of people who get lost along the way just because their stock portfolio got battered down. If you don't understand what you're getting into, market conditions will affect your emotions. This may lead you into decision making, which is dangerous because the stock market is volatile, meaning it can go up and down in short amount of time. If the volatility of the market affects your investing, this may lead you into taking unnecessary losses just because your stock went down. Remember that when you buy the stock, you're actually investing in its business. That's why it is important to identify the real value of the business and how good it is. Tip number 2, identify the reason why you are investing. Many people in Facebook groups of stock market are posting their port snap asking for advice or stock recommendation. If you don't know the reason why you're investing, other people's opinion will influence your strategy. Investing in the stock market is a journey. If you know where you are heading, you will not get lost whenever the market goes. Tip number 3, only invest the money you won't touch in the next 10 years. One of the things to minimize the risk in the stock market is to have a long-term plan. Stock market is an aggressive investment vehicle. Having a long-term time period will give you much time to recover whenever the market goes down, especially in times of crisis. If your stock goes down by 10% and the business is still strong, having a longer time horizon will help you sleep better at night. Tip number 4, only invest small amounts. It is never ideal to put all your money in the stock market. If you have 120,000 pesos, don't invest all of it in one stock. Instead, divide it by 12 so you will have 10,000 pesos and then invest it every month in the next 12 months. Basically, you're getting into the market slowly. Here's an example. You bought SM at 1,000 pesos per share. So with your 10,000 pesos, you will have 10 shares of SM. But suddenly, SM went down to 850 pesos per share. If you bought 10 shares again, you will have 925 pesos average price with a total of 20 shares. It is ideal to do if the stock keeps on going down. Actually, we cannot predict the market. That's why it is ideal to get into the market slowly. However, if the stock started to go down, it is better to stop buying at your average price to maximize all your earnings. That's why it is important how you pick your stock in investing. Tip number 5, only buy good companies. You need to have the skill, the parameters in buying the good stock. Like how can you identify the capacity of the business, how profitable it is, how was the macroeconomy or the industry in that business, and also to understand the strength of the balance sheet or the fundamentals of the company. Picking the right stock is one of the keys to your success in the stock market. Tip number 6, diversify. When I say diversify, don't just diversify your stock portfolio, but also your entire finances. Because it is ideal to invest as well in low-risk investment, such as money market fund or bonds, because you also have short-term goals. And having investment for the short term, your stock market for the long term will keep on growing, so you don't have to touch it. Again, your investment in the stock market is for long-term purposes. It is ideal as well to invest in different asset classes such as business, property, and commodity. In terms of diversification in the stock market, it is ideal to have different stocks from different industries. So if ever something happens in the real estate industry, your entire portfolio will not be affected by it. Tip number 7, build your emergency fund. Having a reserve cash will help you keep afloat in times of crisis. Because of the COVID-19 pandemic, the PSEI went down from 8,000 level to 5,000 level. If you started investing in the past years, surely your portfolio will be in the red days. Having enough cash to sustain your needs, you don't have to sell your stocks at a loss, and it will give you much time to recover as well. Having emergency fund will protect you in certain events such as job loss and hospitalization. It should keep you afloat until your financial life recovers. Tip number 8, have other sources of income. Investing in the stock market is like planting a seed. You plant, you wait, then you harvest. Of course, the waiting period is the longest time. You cannot depend on your investment in the stock market for a regular income during your waiting time or accumulation phase. Having multiple flows of income is important, especially in your financial life. So if ever something happens in your job, you got laid off, you can still sustain your needs with your other sources of income. Tip number 9, get an insurance. Insurance will not only protect your wealth, but your family as well. In case of sickness, accident, or death, you don't have to touch your investment because insurance will be there to pay for everything you need. This is the most neglected financial product, but the most important, especially if you are the breadwinner in your family. It is actually the most liquid asset that you can ever have upon death. Bonus tip, this is for stock traders in the stock market. You know, stock investors are different from stock traders. Stock traders have different plans and strategies. If you are a trader or planning to trade in the market to manage your risk, it is important to have a cut-loss plan. This is your parameter when you will stop your loss from your trade. It can be 5% or 3% depending on the percentage you are willing to lose. My friend once didn't follow her cut-loss plan. So what happened is that she ended up taking the loss more than what she was willing to take. Investing in the stock market needs proper planning and strategy. You don't put your money there just because you feel like it. I hope you have learned something and I'm able to give value to you. If you want more of this, check our other videos and also our articles in investalkph.com. Comment down below your questions and I will answer it as soon as possible. Also, let me know your thoughts in the comment section. If you finished watching this video, comment down below. I will have a risk management plan. Thank you for watching.